Good morning and welcome to the BF Anderson Technical Report for June the 16th. As you notice here, I've got a long-term graph here of the Dow Jones Industrial Average going back to 1980. Now, the purpose of this exercise is to try to understand getting from point A to point B. So if you realize that at this breakout right here in right at the end of 82, the beginning of 83, this was a breakout where the Dow broke 1,000. So that's point A. Then the peak was actually around, let's just say on this particular run, we got up to 1999 and the Dow got up to around 11,000, 12,000. So point A to point B was 12 times, which was 1,200%. So a major move here. Now, the point to realize here is that this breakout occurred after 17 years of the market going sideways. In other words, the market hit 1,000 in 1966, dropped down to the low under 600, around 500 back in 74, which was a very big, deep recession. And then we started to kind of recover. And then when Reagan came in 80, we started to see the market start to firm up, but did not break out till 83. My opinion is the market knew the tax cuts were coming, and that's what was going on. But the point is that if you just think about it, that period of time, 17 years, where the market doesn't go anywhere, you can imagine that the average investor was pretty frustrated with the stock market, was doing other things, real estate, oil and gas drilling deals, tax shelters, buying gold, bonds, that kind of thing. So there's a lot of fuel that builds up. There's a lot of capacity for buying if the market turns up and if we get good news. So the market breaks out in 83. Then you can see we went through a consolidation here. Now this is what's always difficult for most investors in the stock market. You get a nice move here, then you get a consolidation, a deep pullback. A lot of people throw the towel in just about the time that the market turns back up again. So you can see here, this was the 1987 crash. So we had to get from point A to point B was quite challenging, but it was worth it. You just had to fight it out. And so I can remember back in 87, people were just, totally frustrated with the stock market and getting out of it, and then it turns around and starts recovering again. Then we had another consolidation in here. But here is the big consolidation. This is the one we really need to be focusing on right now. This actually entered this price box approximately 20 years ago. I mean, it's been that long that stocks entered a price box, did not exit the price box till about 2013. And just like these little corrections in here and these difficult periods in here, we had a difficult period here, just here recently. Now we've broken out again, and we're probably going to go into some type of consolidation phase at some point. But the name of the game is to get from point A to point B. Now, think of, again, what happened back in the 60s, 70s, and early 80s. It's the same thing here. It's all about human behavior. People are frustrated with stocks. They don't like stocks. They're putting their money in bond funds. They're doing anything but stocks. Now, once this market gets into an uptrend, and the economy continues to improve and corporate earnings continue to improve, good news will travel fast. And all this frustration has built up a tremendous amount of fuel. So if you just kind of go back and think about the 1995 consolidation, which was really it started in 1993, went till about 1995, 96, there really wasn't as much fuel built up as here. Because if you think about it, this was really not that bad of a deal. I mean, the market was pretty much in an uptrend, and people were still kind of liking stocks. Everything was, okay. In fact, we would refer to the 1990s as the decade of CNBC, which is where you would walk into a barbershop and there would be CNBC on the TV. Today, you don't see that. ESPN is on the TV, or the Garden Channel is on the TV. So the point I'm trying to drive home here is that there is a tremendous amount of dry powder that has built up during this consolidation. So the longer the base, the greater the race. So let's go ahead and look at a couple of stocks that are on the watch list this week. Now here's a Chinese company, Alibaba. Uh, it's the Amazon of China, e-commerce. You can see that the stock has really been in a strong uptrend here. Here's the earnings gap. When they announced their earnings, the stock really gapped up and did well. Now, they missed on the bottom line, but they did well on the top line, which I think the market is more interested in revenues right now. So anyway, you can see, though, as of Friday and this week, we have gotten somewhat of a pullback in the stock, but the moving averages are still in an uptrend, and the stock looks good. Now, here's a tech stock. Again, the tech stocks have taken a hit here. And this is Micron Tech, but you can see the same basic pattern. You've got a nice uptrend here. Looks fine to me. Now, we're not really recommending that you get out and do a bunch of buying right now. In fact, we would be very cautious. The tech stocks have given a warning here that the market may be going into a consolidation phase. But we want to keep a watch list and we want to keep an eye on things. Here's one of the top performing stocks in the market today, NVIDIA. Reminds me of Cisco Systems back in 1995. Nice breakout, somewhat of a parabolic move here when a Citicorp analyst came out and put a price objective on the stock of 300 and basically sold off, and a lot of profit taking, and also a pullback along with the market and along with the correction in the tech stocks. Now, another strong stock that is just acting incredibly well is Tesla. Tesla is a hard stock to understand, just like Amazon 20 years ago was a hard stock to understand. But I guess the way you got to think about it is that someday you may look at a parking lot and half the cars in that lot could be electric vehicles. We'll just have to see about that. But that's what I think the market understands, that this is what's coming. But you can see very strong uptrend. Moving averages are looking fine. Stock really broke out in a big way here this week, with the rest of the market pretty much taking a hit. This stock has held up incredibly well. Now, here's a stock called Vertex Pharmaceuticals, just kind of one that has made our list. Another one that's on our list that popped up just this morning is Activision Blizzard. So in conclusion, what I would recommend at this time is just sit tight, don't do anything. If you have a stock that's breaking your stop loss area, go ahead and take a little bit of money off the table. We've raised our cash up to about 25%. May raise some more cash if this thing continues to act difficult. But for right now, we would hold off any new buying, but keep your eyes open. Call me if you have any questions. Thank you.